Asia. Let's go straight to Asia with Vandana Hari sitting in Singapore. Vandana, we're seeing Brent close last night below $70 a barrel, and it's still, while it's up a little bit this morning, it's struggling to get above that. What does that tell you about market expectations for OPEC's meeting today?
Good morning, Sean, and to all our participants. I think the market at this stage doesn't really know what to factor in with regard to OPEC. We do know that the news or signals coming out of yesterday's meetings were minimal. Of course, there was the technical committee meeting, which pretty much repeated what we had heard a week ago, that now they are expecting a much bigger surplus in the first quarter of next year. And then, of course, there was the OPEC ministers meeting, which did not give away anything. What that suggests to me is that it's, of course, that something that has been quite obvious to all of us, that it's going to be an extremely difficult decision for OPEC Plus. And look, as far as I'm concerned, I think there's a range of scenarios. OPEC does need to respond clearly, but will it respond today? Is it in a position to respond this week? And amongst a range of responses, which one will it be? I think all of those things are up in the air.
The idea that OPEC doesn't or should respond, Sarah Akbar, CEO of Oilserve Kuwait. Sarah, there was some thought maybe earlier in the week that indeed OPEC Plus wouldn't respond. They postponed the first of their few meetings, the JTTC as it's called, but no, they went ahead and put the marker down to meet today. Your thoughts on that decision to continue to meet and I presume to make a decision?
Yes, correct. Good morning, Sean. You know, I think what OPEC has done over the past 1 year was managing month by month. And I think there is no reason for them to stop at this point in time. We are still, you know, the world is still facing crisis, still demand, you know, is really going up. Still there is a need to manage supply. So nothing really changed dramatically except for the oil price hitting that high, and then, you know, some countries releasing some of that reserve to bring it down. But this is actually a very temporary measure, and I think they should continue to manage. And for them to continue to manage, they have to do the same as they used to do, meet and agree on their next steps. So what are these next steps in their perception or in their views, their numbers? What their numbers tell them is there will be surplus next quarter, and they should continue to manage supply based on those numbers they have. I mean, I'm sure with the type of management they did over the last 1 year, they have plenty of data to support every single decision they have made. So therefore, their decision to meet is the right one, and to you know, take the right action, you know, is the right thing to do. I think they should continue until there is some kind of stability in this market.
Ole Hansen, head of commodity strategy, Saxo Bank. I suppose if you had given any of the OPEC ministers, OPEC Plus ministers, a note at the beginning of the year that said you'll meet for the last time in December at the end of the year, and the average price of Brent would be $70 a barrel, they would be thrilled. And so the champagne popping, which, you know, was perhaps on the cards, I mean, relatively speaking, Saudi champagne, of course, but nonetheless, Ole, can they take a wider sort of context here and not the drama of the moment, but the bigger picture of a stable managed market rather than tweaking month to month?
Morning, Sean. Well, I think I think what been said already is absolutely right. They have a major amount of data to back them up, and they've been managing from month to month basis, basically meaning as well that they're already warning in the November meeting that they were seeing a balanced market into early 2022, also repeated by IEA and EIA as well. Since then, we've had the SPR release announcement, we've had the Omicron, which is creating some uncertainties, especially here in the northern hemisphere, I say, where we see renewed surge and we see lockdowns. So with that in mind, if they want to continue what they've done already, they probably will make a statement and reduce production or cancel some of the part or maybe the whole increase expected for January. But you're also right at the same time. $70 now when it was $50 a year ago is a much higher price than probably what they could have had hoped for. And I think they're also going into the meeting with the knowing that the economic growth is tapering off a little bit. At the same time, they also need to be a bit careful that they don't get prices so high that it starts to have a negative impact on demand. So plenty of the decisions to be made and plenty of different moving parts that needs to add up to a decision. But I think overall with these prices, it almost looks as if the market wants to force a decision. We've seen these 3 days in a row big sell-offs in the Europe and Asian session. American session, only to recover overnight. So technically it looks pretty weak at these levels. So we need some kind of a bold statement. I think probably also why we haven't really heard anything. They're really keeping things on the wraps because they need to provide some kind of surprise to the market if they want to hold this sell-off we've seen now for the past few days.
Vandana, the people I'm talking to in the neighborhood tell me that they've already pushed up their quotas for the next month and that production levels are already embedded based on the previous guidance. So whatever announcement may be coming today, if indeed it is a suspension of some sort, it's really not an immediate impact. I mean, it's an announcement, but the actual turning the dial on production seems a little bit incongruous with the actual reality on the ground. How do you see those two things working out, the timing of this suspension,
so
if
that's
indeed it
interesting.
is?
Yes, it's interesting what you say you've heard, because they do have until, give or take, the first 10 days of the month when they put out the allocations for the following month. So, I would think that there is still time for countries to pull back a little bit. I'd like to make a couple of points. First on a slight counterpoint to the part on prices. I do agree with Sarah and Ole that yes, just looking back last December, this time Brent was trading $48 and today it's 68. That's still healthier. But, OPEC Plus has been very laser focused on ensuring that the world does not slide back into oversupply. And, that's the narrative and the story we've heard from them throughout, and especially ever since the energy crisis started, and there was more pressure on them to pump more. And they said, but next year, just wait another few weeks, and next year there's going to be a lot of surplus. So while, arguably, yes, the prices do not look that bad, but I think the fact that they are now anticipating up to 3 million barrels per day surplus in the first quarter alone, whereas, earlier they had expected that the surplus will grow as the year goes by. Just starting 2022 with such a humongous surplus, I think that's going to make them very, very uncomfortable. With regard to your second question, and it also ties into the other point that I was going to make, is that should it happen that they decide today that let's just stay the course, which is in my mind equal to saying like we are just not ready to take a decision yet. Yes, of course, we'll see a major sell-off in the market on the back of that, is what I think. But that should not mean that they are unconcerned and that demand can continue going down and prices can continue going down and they won't do anything. And to Sarah's point, I think they will keep very tight reins. And I wouldn't rule out them coming back for an emergency meeting if indeed all the fears that have been baked into the market crystallize. And so in short, I do not expect them to lose grip of the reins on the market.
Sarah, we did see ultimately a few months ago the origins of this agreement in order to agree quotas, to agree future production, and it is into the spring with greater quotas for a number of members. My point is that if you suspend that, is there a bigger political decision here that might be more than just micromanaging the market month to month?
Well, so the beauty of what OPEC did over this last 1 year is that they brought all the different parties together on agreeing the quotas, forgetting about the political aspects. So there
Until
was
August.
yes, of course, that was a short detour, but I think they are back on track. But it's amazing. It's truly amazing what they did with all the political differences, and so they are proxy fighting in some places, but they are working this scheme where they can control supply. So it is fascinating. It is purely economic, and they also the benefit of doing of this, this kind of working together. And I think they wouldn't change because of certain policies. And don't forget, now there is this negotiation with Iran, and probably, I don't know when they will sign this new agreement with Iran, but that's another expectation that this is coming to, this issue of Iran is coming to an end maybe. And don't forget, today, as we speak, the Saudis and the Iranians are sitting behind some kind of door, talking and trying to sort out their issues. So I think
on a technical level, Sarah, again, just the earlier question, to suspend further increases, the technical application of such a thing, it's the 2nd of December. A lot of operators would be already sort of on a certain trajectory. Is it easy to change that? I mean, it's easy to announce it, but actually change that.
But Sean, in reality, talking about 3 million surplus in the market, I really don't know who has that spare capacity, other than Saudi and a little bit in the UAE. I really don't know who else has capacity that is close to amount to 3 million barrels. I just, looking at the numbers, understanding, when you close a field and you try to bring it back again, it is not like you just do it, open the valves and they come back. It takes time to bring production back on stream, and I really don't know.
And Ole, on that point, I mean, the market reality here, we've seen OPEC Plus fail to reach the 400,000 in recent months. And now they're going to maybe suspend, let's say, that agreement for a month. So whatever that is, 200,000 barrels maybe that was going to come is not coming. Is this a market on the edge of, is that a difference? Is that going to twist the direction of this market?
I think at least it will arrest to a certain extent some of the slide that we've seen, because we are down around 20% since their last meeting. I think the main thing right now is really just to get some more data on this new virus strain. We obviously seen the massive surge in the Omicron in South Africa over the last week in number of cases, and if that's going to be replicated around the world, then obviously that will send a fright around. And we can see yesterday just one case being observed in the US was enough to send the US stock market sharply lower, and oil reversing on the day, and to end another week session. So the market right now is just like we've seen on all the other different waves, which have all had the impact on the market for 1 or 2 months before it started to taper off and the market started to look ahead again. We're just starting into this fourth wave, you can call it, and that basically means we need some more data. But they by signaling what they do today, and but potentially also just signaling that they stand prepared to be even more aggressive if need be, that should to a certain extent help the market to find its balance here.
What's your own sense, Ole, on the question of, I mean, this market has collapsed on, even yesterday you said one infection rate and the equity markets go with tailspin. I mean, which is the yin and which is the yang here? Is this move a reflection of a market that was overcooked anyway, or is this the threat of this COVID variant being of a scale that would warrant? I mean, I'm wondering, just to then sort of be able to assess the recovery of what OPEC can do to recover this market. It feels in ways it's more a fragility in the market rather than the threat of this COVID variant.
That's right, and with all commodities, the way they react normally is that you really have to hate it before you love it again, and that's just the nature of the beast, the way these prices react. Because again, in these prices as much trading activity as there is real fundamentals playing their part. So so with the market now at these down at these levels, we have actually already. I think what happened first of all was just like 2018. We've seen most of the major banks, a lot of traders talking about oil at 100 plus. That's really just creating a false sense of security. This market can only go one way, and that's never ever going to happen in the commodity space. And that just left the market with a brutal wake-up call when we started to break down. I've taken note in the if you look at the weekly speculative data, hedge funds, they've actually been net sellings all the way since June, when we hit a high on the combined number there. So they actually into these autumn months they've been selling on a weekly basis almost, and that's part of that is just simply due to the lack of momentum in the market. And now that we've seen the breakdown, that would have triggered some additional stop selling. But it is as it is a sentiment-driven market right now, and the sentiment is weak right now, and we need to get to the point where as I said, you go from loving it to hating it before we actually see a bottom. Quite often, Saudi Arabia has been pretty shrewd in sending out a signal that helped change that sentiment. So well, let's see what they do today.
Well, it feels like a bit trying to get, in a sense, catch a falling knife. It's a tricky exercise.
Yeah.
Vandana, I'm not sure which of the two headlines I'm more surprised by, but ultimately, Switzerland, Zurich running out of ICU beds seems up there in the oh my gosh, really, or South Korea having a record COVID infection level. Even obviously their records are nothing compared to what we've seen elsewhere. But my question is, within the context of Asia, how big a factor is this COVID variant likely to be in a place that's already operating under such sensitivity to any infection? Is this any kind of a game changer as it would be, let's say, in shutting down countries in Europe?
Yeah, so first of all, I think it's worth bearing in mind that we tend to think of or sometimes talk about Asia as one block, but it's been anything but through this COVID, and all the more so now. So of course, China, the biggest economy and oil consumer in this region that everybody keeps an eye on, has been COVID zero strategy since day one and resolutely remains as such. Like a broken clock that is correct at least twice a day. Sorry.
Yes.
They say, oh, we were always right in keeping our borders shut. So it's like Omicron has proven them right. So, as a result, I don't really see them veering from that COVID zero strategy anytime soon. Surprisingly, though, Singapore, where I am right now, so that was for a long time successfully COVID zero. While keeping the population reasonably sort of reassured, if not happy, that we are relatively safer, has changed tack. So Singapore is no longer saying it is COVID zero, and it has been reopening. And just unfortunately, a lot of the VTLs of vaccinated travel lanes began just on the 29th of November here. So bad timing and all that. We've seen Australia and New Zealand also pursue COVID zero, but also start to reopen. And then of course there's Japan and Korea, which are in a sort of a basket all of their own. So it's quite a mixed response. I would say that the phase where countries were sort of looking at each other and trying to see, take good examples from elsewhere, either in the region or elsewhere in the world, that has gone as well. Just very quickly.
But just on that point, before you go to something else, the OPEC will be looking to the demand outlook of those countries, particularly China, South Korea, Japan. One would, even pre this COVID variant, would not have a lot of confidence that there's that incremental demand pull that we've seen in the past there at this moment.
Yeah, so I would agree on that. I think even we've discussed this on your show for the past few months. I think we've generally been sort of moderately, cautiously optimistic about continued demand recovery in China. But then again, Omicron is not the worst. And China didn't suffer a huge Delta wave, but we do know back in August, just with 24 or so cases, that sparked a locked down in more than half the country. So we've not really been very optimistic about a steep growth curve, and as far as Chinese oil demand is concerned, I think that nothing changes there. The demand will continue recovering, but at a much more moderate rate. I think Japan, Korea, again, not much has changed. These two countries were, yes, they are major consumers in this region, the third and fourth largest after China and India, but never really major contributors to demand growth, even in previous years. India last month was a bit of a dip in demand. So again, India has not been one to impose very strict restrictions, and I don't think they will go back to it. But if I were OPEC and I were to look at Asia as, okay, so what can we expect in terms of demand in Asia? I would take for as a base case scenario a continued very, very gentle upward incline in demand, but nothing spectacular in terms of growth for sure.
Sarah, the critical piece here in the Gulf ultimately is fiscal health, right? The idea to balance the budget and an outlook for next year with budgets generally in the mid to high 60s. OPEC is likely to make that the first line of defense, regardless of quotas, regardless of anything else. Does that seem to you like the top priority, fiscal health?
Oh, Sean, over the last 50 years, whenever the prices are low, fiscal structures and fiscal health of economies have been on the top of the agenda. When the oil prices go to around 70 and 80, it's like, forgotten. Some countries in this region have made serious steps in diversification of their economies, and like the UAE, Saudi, and Qatar. So those countries, I think, with the with the oil price, that it's much lower than, for example, countries like Iraq, Iran, Kuwait, and the other countries that actually do need to look at their economies in order to have a much lower oil price for their budget balances and so on. But whenever we have, it is typical, it's happened in cycles over like these 50 years. Whenever the oil price is up there, they completely forget what they talk about and they just do business as normal, and they lose opportunities year after year. So I really don't think there is a change in that kind of scheme.
That strategy remains. Let's get the survey question in, and just a real simple demand question. Does the oil market need more oil for winter months, over these coming winter months? Does the current production level is adequate? Does it actually want more? This seems to be, we've had commentators on here earlier in the week saying we're in a very tight market. I mean, COVID variant aside, the unknown COVID variant aside, a week ago we were above $80, a tight market apparently. Now we're way below that. Does the oil market actually need more oil for the winter months ahead? Supply meet demand and all of that. We're already at below 5-year averages on inventories. What is the actual need on the market? Ola, your thoughts on the fundamentals here. There are a lot of unknowns ultimately, but the bearings are, you change supply strategy today, it impacts probably 2 months from now, really, in terms of barrels on the ground, so to speak. Where is the need of demand supply balance at this point for what can be impacted over this decision into the coming months?
Well, I think as I said earlier as well, the main thing is just to change the psychology in the market away from the very negative sentiment that has been built up since Friday. So we need more news on the virus side. But also, I mean, we've seen the 1 year backwardation.
I mean, on that point, sorry, I'll just interrupt. If Mr. WHO comes out tomorrow and says, "Oh, false alarm, this little pesky South African COVID variant is actually chocolate and not a problem," do we go back up $10?
I think there's a good chance that will happen. But again, as I said, the market first of all just needs to stabilize, so it won't be a straight move back up again, because it will take some time. But yes, that would sow the foundation for recovery. But I think also we have to remember that what we have this time around, which we didn't have a year ago, we have an energy crisis in Europe, and to a certain extent also in Asia. Record high gas prices, coal prices, and coal in demand as well, and that is providing some underlying demand for oil, for fuel products through the switch. So I think that will also help keep demand relatively high during the winter months. But additional barrels at this time is probably not what the market needs.
And just to put you on the spot, Ole, as I will the ladies after you, what will OPEC do today?
I think that as a minimum they'll pause, then they'll say they'll stand ready to do more if WHO comes out with additional warnings.
Okay, Vandana, your thoughts on that from the point of view of we have these outlying factors of supply. Obviously, the Iran talks in Vienna could deliver some barrels. Who knows if that's a slow or another drawn out process or not, but there is supply out there other than OPEC plus. We're seeing increasing signals that the US recovery is slowly but surely going up.
Yeah, there is supply. I would not hold my breath for the additional Iranian barrels, even though it's a substantial number, right? Potentially more than 1 million barrels per day additional oil could come out of the country. No, I think just, it's going to take several months at the very least. And indeed, yes, the projections are for US shale to make some sort of a comeback next year as well. But even with let's see, the EIA projection, right, the latest one is about 800,000 barrels per day year-on-year increase. But, with more than 1 million barrel per day drop in 2020, another 200,000-300,000 barrel per day year-on-year drop this year. So even the 800,000 next year is going to only partly make up for the losses that the US production has suffered since 2019. So your earlier question to Ole actually quite nicely encapsulated the single biggest dilemma for OPEC plus and the market. That is the market a little bit tight? And perhaps my answer is a bit different to Ole. So I think, yes, fundamentally, the market was tight, which is why we saw $86 and we saw 82 even after the US had announced the SPR releases. But the question for OPEC is not whether, as a result of which should it continue to taper. The question is that how quickly and to what extent could the market swing from a fundamentally tight market to an oversupplied market? I think that's the big question. And you wanted me to say what I think they will do.
Yes.
I think probably the safest option will be just to pause the 400, but I will go back to what I said earlier. I think at the same time, and this will be key in terms of messaging from them as well. Otherwise, the market, I think, will just freak out that, OPEC is not doing anything about it. Is that I think they will stand ready to come back once they have more data and evidence of demand going down, come back and deepen the cuts if need be.
Yes, that's we had that moment in January this year where Saudi Arabia kind of, as they would say in America, open carry. They put out the M15 on their back and said, we have 1 million barrels here that we can cut. So you see it right here in my hand, just pay attention. And the market did pay attention to that. Perhaps that's one of the options. Let's go to the survey result and give Sarah the last word this morning. Does the oil market need more oil for winter months? No, that doesn't sound like a tight market in this room, only a few days after we had $82, not even a week ago. Sarah, your thoughts on the decision that OPEC Plus will make today, and particularly your outlook for the Iran talks, because given the time frame, we're talking that this Iran talk started this week. By the time you make a decision now to impact barrels, you're talking the first quarter anyway. Does OPEC Plus need to pay attention to the possibility of more Iranian barrels coming back?
Well, not immediately. I think probably, as Vandana said, it will take some time before those barrels come to the market. But, Sean, what we haven't talked about today is the weather. So is the severe weather coming up? Because until now, the weather has been very mild everywhere almost. So, which is abnormal, truly. And it looks like a shift in timing. So is this weather going to change to become much colder with, lots of snow and so on, which will drive more demand as well? So that we haven't talked about, but that's a factor that normally comes towards the end of the year and the beginning into the next year. But the other thing, we keep forgetting the results of COP26 and the impact on climate change and what other people need to do. I think those type of elements will come into the decision of OPEC as well. I think, it's not immediate, but since they are meeting, I think they will talk about this kind of stuff and make their decision basically based on that. For now, the thing that it looks, I think I agree with Vandana, they should pause, and if they seriously think there is a 3 million surplus coming to the market, then they should pause. Yeah.
The outcome of the meeting today, I think it seems to me, in terms of the voices that we've heard, the Saudi energy minister did say that he didn't think the Omicron variant was a threat to the energy oil markets, which seemed kind of an interesting comment, but some insight perhaps. We did have last week the UAE issuing a statement about rolling over after the SPR and then withdrawing that statement. So I don't know, it feels to me like this mightn't be just a normal, as you would expect. Of course you suspend. All of the signals are, oil prices crash to these levels. Of course you suspend increases, but I don't know, it feels like there might be something else in the cocktail here today, where that easy answer might be just a little bit out of reach. I don't know. I just have a sense that that's not, there might be something else in the ointment. So, and hence, I think the market is sensing that too. Otherwise, if the market believed that everything was a suspension today, you would think that oil prices would be able to crawl above $70 if OPEC were going to suspend their agreement. And it's struggling, and it has all week struggled to get any upward momentum. So that's interesting as well. So who knows? We will see. Of course, it's a tough decision. They're going to have to weigh up so many unknowns, which I think is interesting. But suspending the agreement, I think, is a big decision for all of the reasons from where it was born. It was born from a difficult place in August, and I think that birth still remains an issue. To suspend would have to revisit that space, which might be problematic. Anyway, that's my few pennies worth. I'm now going off to the rugby because the Dubai Sevens are on this weekend in Dubai, where we're fully open and having a great time. I don't know what it is where you are, but here we are. We got #1 ranking in the Bloomberg, whatever it was yesterday, best place to have COVID or something like that, which seems sort of an odd ranking to have, but nonetheless, UAE was, and deservingly so. I think they've done a pretty good job here. Vandana, thank you very much. Have a great weekend. Sarah, as always, thank you for your insights. And Ole, all the best. Thank you so much. We look forward to catching up with everybody next week. All the best. Thank you.
Bye-bye.